probably the most influential person in the industry that doesn't get enough credit for being all the things that he does. So Bruce Fenton is a friend of mine for many years. He is the creator of, we call it the Bilderberg for Bitcoin, the Satoshi Roundtable. Really was able to, I've always said that like CoinAgenda, we want it to be sort of this select group to educate investors and to keep the current investors apprised of new opportunities, really spun off of BitAngels. And I wanted to be the Goldman Sachs conference for blockchain because Goldman Sachs isn't doing it yet. We pretty much stayed true to that. We sort of like, the years at 600s, because there's 600 people in the room who are as good as the people on stage. The years like 2015 that we had Nick Szabo and Craig Wright there, and there's only 80 people in the room, that was the right size for this year. We got about 200 and something people here across the 3 days who've registered, spoken, sponsored, and I guess that's the right number for this year. So, but nobody really did the TED or the Bilderberg until Bruce came around and did the Satoshi Roundtable, which is my favorite conference of the year. It's my wife's favorite conference. It was the birth of the Bitwives. I think Emily called it the desperate Bitwives. So basically, they would hang out and just have fun at a resort somewhere in a hidden location offshore, and so much has happened at that place. So Bruce also, I think, just really brings an immense amount of credibility to the space, having come from Morgan Stanley, private wealth management, managing on his own firm, Atlantic Financial, billionaires' portfolios. And then he comes here and takes the most sort of like can't win job ever, the unpaid executive director position for the Bitcoin Foundation when it was just, in total chaos and shambles because someone got elected with the purpose of shutting it down and said, hey, you're all going to run out of money. And Bruce is like, I'm sorry, if we stop spending money, we won't run out of money. It became an all-volunteer organization, and it's, really kind of rebounded, and he's still on the board there. So many other things about Bruce, but right now we'll be fascinated to hear his take on security tokens since he's been like I wouldn't call you a Bitcoin maximalist by any means, but this is the first time hearing you talk about security tokens. Ladies and gentlemen, Bruce Fenton.
Thanks, Michael. That was great. This is a great conference. Michael's a great guy and also somebody who is very influential, doesn't get a lot of credit. I have 1 million slides, so I'm going to go through them really fast, cover a lot of ground, a lot of content, have plenty of time for questions. So programmable money, we talk about, Bitcoin is programmable money. That's what makes this cool. What I'm going to talk about a little bit is how programmable money will fit in the world of securities tokens. And some of this you know already. We've talked a lot about it. Certainly they're an important part of the global economy. Everybody should recognize that. I'm interested in this because I've been in this since birth. My mom was a stockbroker. She was a single mom back in 1977 when I was 5 years old. She got a job as a stockbroker. I started coming in, and that was my babysitter. I grew up sitting on the floor of the firm, playing with the pink sheets. I traded my first stock at 9. I used to play with the Quotron machine. And at 14, I got my first job at Dean Witter, and then later that became Morgan Stanley. At 19, I got my Series 7. I've been registered in some form or another by the SEC for 27 years. So it's sort of in my blood. So when I got into crypto, and in that career, I specialized on emerging technologies and emerging markets. First, that was China. When I was at Morgan Stanley, we worked on things like the Advanced China Fund, which was a big deal, and they had all these crazy stats. Like, can you just imagine if the Chinese started having televisions in every home, or phones, or they drank as much Coca-Cola as we do? Well, now we know what's happened. That worked. I'm going to skip those. But so I became interested in cryptocurrency because of that interest in emerging technology and emerging markets. And we sort of participated in that ourselves. In '94, we became the first full-service investment firm online. I founded Atlantic Financial. When I left Morgan Stanley, founded Atlantic Financial. And at the time, we were very early internet pioneers. So we saw this boom and bust cycle happen before. We saw, we were a .com, and we were in the .com midst as a broker. And then I focused a lot on the Middle East. I actually worked over in Saudi Arabia, lived there, and that's where I worked with a lot of these, billionaire and decabillionaire type of clients and customers doing, very, very, very large deals, multi-billion-dollar deals over in the Middle East, because I saw that as kind of an emerging market as the economy, in Dubai. I was early, in Dubai, and that's what brought me into this technology. The theme is the same in my career, where I, always try to look at things that have exciting change. So when I got into cryptocurrency, I immediately said, well, how can I match this new world with my world that I came from of securities? So right away, I was interested in things like ETFs, and pretty early on, I realized that a blockchain is really good for moving something of value from one party to another. So securities tokens were something that I was interested in pretty early on. I think before a lot of folks were talking about it. Securities are different than currency, and I should probably add another slide here to talk about utility. It's different rules and a different way of being evaluated. I'm just going to skip over this really quickly. Is Dennis still in here? Dennis O'Neill? He'd like this, because I made a tool to help analyze assets in looking at how you look at what this, like the last panel I was talking about, how do you look at what this world looks like with securities tokens and utility tokens and things like that. Having had sort of securities in my blood, right away I knew that these laws aren't really optional, at least in the United States, having been governed by them for a long, long time. I knew right away that there wasn't some way to cypherpunk around it. If there was, I would try and figure it out. The laws are the laws. If something is a security and it's sold for money, you're under the US laws. So when the DAO came out, I said, wow, that's, and you may remember the DAO was early in Ethereum, was a few years ago. It was this kind of fundraising token vehicle. And my immediate reaction was two things simultaneously. One, wow, that is incredible. And two, that is definitely a violation of securities law. Having been governed by these, I knew you can't go and raise $100 million to put in venture things and have it not be a security. But I was fascinated by the fact that the money, I've done a zillion deals, and you know how it is, you have people sending you documents, and now at least we have DocuSign. In the old days, we didn't have that. But no deal had ever been so seamless as the DAO. I just put my money in, and bang, I got DAO tokens. I said, this is going to change everything. So at that point, and I knew the other part of the thesis was this is legal. And that's great for people who are registered, because you have a little bit of an advantage. I'd like to see the laws reduced or eliminated over time, but as an activist, that's not realistic. There's not really much will for that. The laws have been around for 85 years. Might as well you comply with them, or it's really your sort of three choices. You either comply with them, or you don't be in business, or you be a defendant. Those are your three choices. I chose be in business. I made this method, that's why I asked if Dennis was here, because it's sort of inspired by CanSlim, which was invented by Bill O'Neill from Investors Business Daily. This is a way that if you want to sort of put everything on one platform, say, how do you analyze these things? People talk about securities tokens as if it's part of cryptocurrency. And mark my words, people are going to make a big mistake. They're going to think, oh, I'm getting exposure in cryptocurrency because I bought this security token. No, only if that business happens to be in this industry, which most of them aren't going to be. And you already see a lot of them now are not. They're either trying to disguise themselves as blockchain, or they're not even blockchain at all. And they may be great businesses or bad businesses, but they need to be judged separately on their own merit as securities and what they do, rather than the fact that they're instead of having a piece of paper issue the security, you had this thing called a token. So this method is free and open source. You can use it. You can put it on your hedge fund or whatever, and I have a more formal version on the website. Basically, it's 10 pieces of an acronym, things that you would look for. You rate them from 0 to 10. How secure is something? Bitcoin would probably rate a 9 on that. What is the participation? Ethereum would rate very highly on that. Does it have a community? Who's the technical details? A lot of ICOs would rate very low on this. But the participation there is important. It's what are you getting? What are you getting when you buy these tokens? That's my first question with utility tokens. Well, what do I get? Oh, you get part of a community. Well, what? How is it worth something to me? Oh, we're going to have a bunch of people. It'll go up. Well, that's unacceptable to me. So that would be a 0. Anyway, so you can go through all these and you can rate it. You may have different opinions. You say, oh, you don't understand, Bruce, man. Metrics don't work, and economics don't matter anymore. It's all about users, and everybody loves it, and it's on Binance. So you may rate it higher on participation, but you can rate it on whatever you think the cases are. And from that, you'll have a rating of between 1 and 100 that will tell you what it will look like. But that's off the topic. I'll go back to what a security is. Security, the US defines it in this very broad definition. There's been Supreme Court definitions that have said that it should be interpreted very broadly. Basically, anytime you're getting money from somebody. I prefer as kind of a dictionary definition or a non-legal definition, I would say that a security is an agreement that's tradable. That's it. I'll give you $10,000, you give me 50% of your hot dog stand. That's a security. Hey, I love CoinAgenda, Michael, let's partner up. I want 1%, that's a security. Those are all securities. Securities are in every part of how we do things. And when you make them tradable, the moment Michael and I take that agreement, we could write an agreement right now on this paper. Michael could sell me 1% of CoinAgenda. I could take that piece of paper and I could sell to you. I've just traded a security. I believe that would be legal. Depends on how we raise it and stuff like that. I believe that we could actually do that in this room and comply with the laws pretty easily because the laws are clear. And by the way, you don't see AML KYC. That's a nonsense thing that was invented by jackasses. That's not a real thing. There was no AML KYC in the time that I was in the business. People act like this has been, you can't not. No, the world doesn't work that way. The whole world was built for 50 years without this AML KYC nonsense. It's not in the law. Do you see AML KYC? This was something that jackasses invented way, way, way later to score political points on this 9/11 fear nonsense. They didn't even have most of these rules until the 90s. And then they made them worse and worse. You don't need this to do commerce. The root laws aren't that bad. You got to go back to the basic stuff. What's a security? It's an agreement. Guess what? We're allowed to have agreements. We're allowed to trade them between each other. And the law says that we can do that. So all this extra stuff that people have piled on over the years is just that. It's extra stuff. Now, some of those are laws, and you do have to comply with them, like if you're a broker and you do all this stuff. It's just layers and layers and layers of complexity that a bunch of MBAs who hired other MBAs had focus groups to decide on a bunch of nonsense. And that's how our industry is proceeding, to figure out how can we comply with this archaic bunch of crap that we don't need. This is what you need to comply with in the United States. Comply with the Securities Act, 33 Act, 34 Act, Investment Advisor Act of 1940, if you want to do it. Those are the real laws. Most of these other things are procedural nonsense that you don't need. You don't even really need a broker. The example that I just mentioned, we could take in a token and make a token out of the thing, and I could trade it to you just as easy as that agreement. We've traded security. Where's the broker? Where's the AML KYC? I'm a broker, so I might be subject to different rules, but if other people did that independently, that's the way the world works, and that's the way it worked in the 1930s. It was legal. People would trade stocks under a tree when the markets first came out. There's a whole bunch of ways that this can be done legally. There's all these exemptions. Securities are legal. This whole nonsense, thank goodness people are getting smarter about this. If you look at my old Twitter from 3 years ago, I was arguing with people like crazy about whether securities tokens would be a thing or whatever. They are a thing. They're legal. They're legal and they exist, and there's a whole mess of ways to do it legally under the law, rig crowdfunding and things like that. So you can issue a securities token right now, absolutely legal, it's been done, and you can trade it. Now, if you're a broker, like a registered investment advisor or something like that, you have different rules, but a lot of those things are going to be obsolete. So the way to look at things, I think, is what the world is going to look like, how this works, and then go back to the original laws that you actually need to follow. So when you get into publicly traded securities, this is interesting. I'll talk a little bit about the first time anybody did this, because I think there's a lot of similarities to what's going on in the world now and how the world is going to change now versus what happened when the first time anybody made a publicly traded agreement. In 1602, there was a big trade war, and the Dutch were trying to get market share on pepper and nutmeg, and crucial spices, which were huge, huge, huge things, by the way. They were like the size of the US dollar in equivalence. And the way to finance these expeditions, you'd take the equivalent of roughly $300,000 in today's money, life savings for the equivalent of upper middle class wealthy people, and they put that all into one shipping expedition. And then the ship would go out and you'd just hope it comes back. Hope it doesn't get sunk. Hope it doesn't get attacked by pirates. Now, in modern times, we say that doesn't seem like a very good model. You know, you lock it up, hope the ship comes back. Why can't you spread your risk around? Well, nobody thought of it until then. You didn't have a way to do a tradable agreement. You had agreements. Hey, Captain, I'll give you $300,000, take the ship, go over, bring some nutmeg to Amsterdam, and come back. That's an agreement. We can make that agreement pretty easily. We can make that agreement today. Ships exist, planes exist. We can do that exact agreement. All this did was made it tradable. So the company said, yeah, you know what? You give us some money, and we'll put it towards this shipping expedition. We'll get more money from multiple people, and then you can trade that between other people. And that completely changed the world, changed the way everything works. Just the way that you move capital around completely changed the whole way the world works. And that's important to remember, because that's what's going to happen right now. The whole world's going to change because the way capital can move better. So it became the largest company in the world. It unlocked capital in a way that couldn't be unlocked, so they could do things that couldn't be done. That's going to happen again. People are going to, because a new method that hadn't been invented before enabled something, that's what's going to happen with securities tokens. So it grew very large. This is how it is in comparison. This chart's even better. This is the size of it in adjusted dollars. It's bigger than all these companies combined, you know, Apple, Alphabet, Google, Microsoft, and so on. But the point is that this all was caused because of this invention of these things called shares, which are tradable. That's a good thing. That's a good model. It's worked for more than 400 years. This discussion about should we do securities, should we not, it is really strange because this has been proven to work for 400 years. Why do you say, oh, we've now invented this new ledger, let's scrap the old system and have these crazy systems where you give $200 million on hopes and dreams and forget about things like revenue and stuff that matters? It doesn't make any sense. It's ridiculous. So this system works. Stocks work. And securities include things that are not just stocks. They could be bonds, all kinds of other things. It works as a system that's been around for a long time. And they traded, and they used to even trade as bearer instruments. You could trade them around, just like I said in the simple example that I gave, which is a legal example of how you can do that. The one on the right is fake. So they used to actually, because they were bearer assets, you had to have, you know, the kind of controls that you would about currency. So this gave rise to markets. Once you had something trade, the world said, how do we trade it? How do we use it? And markets grew, became very effective. Oh, there's Rick and Morty talking about what a stock market is. And what this trade needed to figure out a way to do this, and it got very complex, very, very simple, very, very quickly. In 1602, tracking all of these shareholders became difficult. They had what was called a company book at the Dutch East India Company, and they would write who has what. So when you take your share and you sell it to you, and they would write that down. That's how they kept the book. Then, you know, it became more complex as markets grew throughout the 20s, the 30s, the 40s. Tracking who owned what became very, very, very difficult. By the 1960s, it was a complete crisis. I'm going to write a post on the speech that was given by William Hack, who was the director of the New York Stock Exchange. It was absolute doom and gloom. They were shut. A lot of financial people in the room. How many people are brokers, financial people? How often do they shut the markets? Never. They never shut the markets. They shut it. There was only like 4 holidays a year, and really, really extreme emergencies. But in 1969, they started shutting the market at 2 o'clock every Wednesday to take tracks of all of these pieces of paper that everybody was moving around to say who owned what. Then they had to close every day. Absolute crisis. The markets were going to be destroyed because of a scaling issue. So they said, well, you can't really trade things around like that. Now remember, this was legal in the 60s. They didn't change the laws. They didn't say, oh, no, you can't do that because of the laws. No, they just couldn't physically move the stuff around. Those laws are still here. They didn't repeal them. It was legal then, it's legal now. You can trade things around. The reason that we ended up with what I'm about to explain, they couldn't solve the problem. So what they did, I'm getting to another piece here. What they did is they put all the money in the name of one company, basically, and one centralized trusted party. In the United States, that's DTCC. In the EU, it's Euroclear. And basically, the way that this works, a lot of people think it works this way. They think that, you know, Apple has a database that says who their shareholders are. A lot of startups think that way because that's the world that they came in. You know who your shareholders are. Apple doesn't know who their shareholders are. If you own Apple, they don't know. Any Apple holders here? Come on, somebody's got to own Apple. Any Apple phone holders? They don't know who owns the shares, okay? Think about how that would work. So if you, Susan, have 100 shares of Apple at Merrill Lynch, and you sell it, if she sells it to you and through the brokers, there's no logbook saying, this is who, if it's at Merrill Lynch and you're at Schwab, you think Merrill Lynch, what was Merrill Lynch? Oh no, she's good for it. Those shares are good, Schwab, trust me. No. Do they share their ledger? Heck no, they're not going to share their ledger. That's the last thing anybody's ever going to share. Nobody shares their ledger. They don't even share their ledger with Apple because they don't want Apple to know who their shareholders. They might be activists, they might be hedge funds, they might be insiders who want to sell. Who knows? They're not required to. So Apple doesn't even know who the shareholders are. Merrill Lynch has a database and their own ledger, and they know who their customers are, but they don't know who Schwab's are. So how do you two know that this trade is a good trade when it's done between you? You got to rely on this trusted third party. Well, that worked well for a little while in the 60s and 70s, and then it got worse and worse, and now you have this huge volume, and it got more and more complex, and more complex, and more complex, and more complex. And by the 90s, it was completely impossible, and they just gave up. They said, we can't even pretend to know who owns what. Forget it. We'll just make up a fake company, put everybody money in one company, and that's CD&Co. And that's a real thing. You do not own your stock. If you think you own your stock, look it up. It's trivially easy to Google CD&Co, and you'll find that you do not own your stock. And this isn't some, fancy language. It's legitimate legal language backed up by many legal cases. You do not own your stock. So they had to trust this trusted third party to keep the ledger and trusted third party to keep all the ownership. You just couldn't do it. So there's a lot of problems with this. You don't know who owns what, really, because you have this weird ledger system. So Dole, when they did their acquisition, there turned out there was more people who thought they had shares than there was shares. They thought it was 36 million, it was 49 million people came, yeah, here's my certificate. So there's suits about that. There's still paper certificates, and there's still digital things that are just might as well be paper because they're so horrible. But there was $1 trillion that almost got lost in Hurricane Sandy because it's sitting in a basement in Jersey City. And DTCC spent 3 years and millions of dollars with secure Brinks trucks bringing these wet, soggy things from the basement over to another place where they could vacuum them off and dry them off. This is just now. $1 trillion. Can we do better than that system? We can. This is a slide from a Bitcoin presentation that I did. It's exactly the same principle, properties. The current system is already distributed. You have Merrill Lynch and Schwab and Fidelity and everybody sharing these, you're not really sharing, but cooperating on these ledgers that they share with one central party. But you can completely decentralize it. You don't need DTCC anymore. All DTCC says is what's true. They're just there to say that her Apple shares are real. Guess what? We don't need them anymore. We got a thing called a blockchain that does it. Anybody own any crypto? All right. Do you know you really have it? Well, how? Who has the ledger? Don't you need a system of a proper clearing firm with a blah, 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 blah? No, you don't. You just need something to tell you what's true. A blockchain can do that way better than this convoluted, weird system. You can use it on Bitcoin. I created real security worth millions of dollars. It's a real thing. I created in 5 minutes using an open dime and a pen. You can create a security trivially easily. I can make this microphone a security. I could say, this microphone, serial number, blah, 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 represents 10% of my company. Anybody want to buy it? Somebody buys it. You better believe that microphone's a security. You know how I know it's a security? Because if the SEC watches this tape, they will consider that a securities offering. It is definitely a security. If you say something is a security and you're offering the terms, and you're under, most people try and avoid it. They say, oh, no, I'm not a security, I'm a utility. But if you say you're a security, you say, yeah, it's equity in my company. Well, then it's definitely security. No doubt it's security. So the only question is it legal? There's not really this concept of legal securities and illegal securities. There's no such thing as an illegal security. There's illegal offerings. So if I took this microphone and I said, I'm going to sell it for $100 million, and I'm not going to get your accredited investor status or anything else like that, that's an illegal offering. But if I say this microphone represents 10% of my business, and I sell it to you for 10 grand, that's legal. We can do that right now. It's legal. That would be a security. It's a little bit of a weird one, but as I said, the definition is very, very broad. The SEC is not going to be, oh, no, Bruce, it's a microphone. You're fine. Because then we'd have microphone offerings, and people would try and do that, and that would be only slightly better than some of the scam utility offerings that are out there. But so Bitcoin has been used. It's been done in a more advanced way. I'm on the board of Medici Overstock 2015, and again, real thing. So when people say, is securities tokens real or not? Well, Overstock's real. Are you saying this security wouldn't be worth $5 million just because they put it on a blockchain? That wouldn't make sense. So I did it. Overstock done it. Many others have done it. It's here to stay. There's some problems with this. A lot of issues of clarification around hack and loss and that kind of thing. But the future, I think, is really bright. There's a whole bunch of neat things. I won't get into this. But there's stuff like co-ops and stuff that maybe equity doesn't look like we think. Maybe because of the ability to use smart contracts, we can make entirely different structures like co-ops, which are really cool, that will trade in a completely different way. But back to good old plain stocks, I think what we're going to see is a long tail of investment. The same way that I can go, when I was growing up, I had 3 channels to choose from. So, Magnum PI is on, that's what you're watching. And then they had a 4th channel, cool. And then cable came along, and you could watch music all day. Well, now, you can watch anything in the world. You can even watch me on YouTube. You can watch the most obscure topics. You can watch about how to do any kind of art. There's a guy who takes coins and carves them out. You can learn anything on YouTube. It's this long tail, and that's what social media and internet. I believe that tokenized securities are going to bring that to the world of capital formation. If it's very easy to create a security and make it tradable. The problem is businesses, every small business there is, that you see, there's not a lot of small businesses on the strip, but on a normal street, if you go out, every small business is a security. Usually it's closely held, maybe one family. They don't trade it. And the reason they don't trade it isn't because of the law, and it isn't because of all these weird, convoluted systems that people have invented. The reason they don't trade it is because it's just hard logistically. It just doesn't make sense. If you have a sandwich shop, you're not going to sell a small amount of equity, maybe $100,000 worth you do, and then you go to your lawyers. But if you could sell $100 worth of equity, if you were a customer of a sandwich shop and you could buy $100 worth of equity in your favorite store, or you could read about something cool that somebody did that's your niche hobby online, you say, wow, this person is doing Panamanian comic book art, and that's my favorite thing, and I want to invest in their business, you can do that. So what this will do is have a long tail as it's easier for companies to become public and have price discovery and have their securities trade, particularly equity. I think you're going to see a completely different world. I think we could see a world where we have 500,000 publicly traded equities. And in your 401k plan, maybe you own 2,000 equities. Why not? Why wouldn't you own $100 worth of your favorite business in town? And then think about how that changes the world. You may have a Chinese billionaire who decides to buy a portfolio of US laundromats or pizza houses. So that strengthens that person who's a business owner. It strengthens the economy around them, their community. There's a lot of benefits of it. But the main thing is that it unlocks capital in a way that hadn't been done. Same way that Dutch East India Company did. Changes the way that the world works. So I told you I was going to go through a lot of slides quick. I'll close there and open it if we have time for questions. My name's Bruce Fenton. I'm on Twitter and stuff. I put this picture of this. I'm trying to make a post on it in the next couple weeks. We're trying to do this cool sort of crypto retreat at a farm in New Hampshire. I want to do a lot of, small, like 25 people targeted sort of discussion things to discuss about not just this, but all kinds of issues. Susan Spen, it's pretty cool. And so I've talked a lot about a lot of different things, what securities are, the rise of the markets, the Dutch East India Company, how tradable agreements work, how I think a blockchain can solve this, what the problems are of the current custody and clearing system, how I think it might unfold, and what the benefits are. So that's basically it. Thank you.
Amazing, amazing. I'm learning so much today. Yes, absolutely. Questions?
Thanks, Bruce.
you.
I don't come from the securities background, so I just learned a lot. That was like a fire hose of awesome information.
I was going to cut it into shorter ones, but I figure
Oh, that was great.
It's a lot to cover. I could go on for hours.
Can I ask you one of like basic questions? People ask me, I don't really know the answer, but so what do you think is going to happen? Like utility tokens, we were just talking about it at launch. You know, are they passé? Are people? What's going to happen?
Well, they have to have real utility. Most utility tokens have been issued as a form of avoiding securities regulations. People say, oh, here's an easy way to raise money. I can raise a bunch of money and do cool things with it. And you know, if I raise the money, in order to not be considered a security, I got to pretend I'm a utility. So let me go back and artificially try and create this thing and make all these. That's why you go to these weird, crappy, you know, channels with a lot of these projects, and you know they don't talk about price, and it's just very, very weird because it's all this weird kind of scammy dance about trying to get around the regulations. As I mentioned early on, I said the regulations aren't that hard. I mean, I'm an anarchist. I don't like the regulations, but I've complied with them for 27 years now. It's not that hard. You just pay a lawyer and you just do it, and you follow the rules that you follow. So right away, I thought that the utility idea was not that strong. You'd have to have the utility have real usability that's useful for something. So most companies, because they're mostly, frankly, a lot of them are kind of, and I'm not talking about all of them. There's very good projects, I'm sure, but most of them, as a general rule, 99% probably, just sort of pursued this as how can we make money. The first question was, wow, let's make a bunch of money. And then the second question was, how do we get the lawyers off, or how do we get the regulators off our back? And then the third question was, oh, I know, scammy utility thing. We'll pretend it's scammy. And then we go on and you build from that. And that's not any way to build anything real. Very few of them actually said, here's something that's useful that people need, and we can solve this with a distributed ledger that can't be solved elsewhere. No, they didn't do that. They did it because, oh, let's raise money. And then we go backwards and pretend that we needed it, but you didn't really need it in most cases. In almost all cases, you didn't really need a blockchain for these things. So I think that most utility tokens are going to, die out. At least, and also from an investor standpoint. Why? Why do you invest? What would be the reason to invest? If you don't have terms that tie it to something that has real value, you're just betting on a hope and dream. Hope and dreams are cool, but I don't think it's $500 million cool or $100 million cool. You can duplicate these things in a minute. You know, what do you have? $20 million worth of marketing and 10 engineers. Okay, that's not worth $100 million. And by the way, you don't even have a business. At least if it was a real business, you could say, okay, what are you doing? What are your quarterly numbers? What are your goals? Why are you buying a Lamborghini as the company car? You could ask these things, but if it's just this idea that, oh, no, you don't have any accountability, we took your money and we're going to try and make it into something to keep the regulators off our back to pretend that it's useful, I'm not a fan of it. I don't think the investors are going to buy it, even in the markets that it works. They're going to want to see something that ties to something real. Yes?
You gave us a very good definition of what securities are, or what security tokens are, per U.S. law. So what, in your opinion, what's the definition, the legal definition of the utility?
That's a good question. I would say it probably would be anything that doesn't fall under this definition. Now, yeah, and I would make a differentiation. I'd say there's protocols, too. Some, like Ethereum, Bitcoin, Litecoin, they're protocols. So they're not really designed to have utility other than that the protocol is itself a utility. But utility, I mean, it was an invented term. I mean, it was an invented term because people looked at that thing and said, "Oh, yikes! Let's check off the boxes. Are we a bond? Oh, no, we're not a bond. Are we a company? No, let's not talk about earnings and not have any accountability or any money. Check off all the boxes until you have nothing left but this empty shell of nothing. That's a collectible. It's collectible. It's a collectible. That's it. You got a collectible. You got a digital nonsense of nothing that you think you're saying is going to be worth something because you say it is. And then in this process of BSing that these people come up with to create this thing, come back and say, well, okay, so we'll make the token payable for our services. That's what we'll do. And it's utility because we offer, microphone repair, and you can only pay it with microphone token. Okay. You're competing against cash. That's hard. You're not going to compete against cash. Bitcoin will crush you if you try and compete against cash. You're out of your freaking mind if you think that you're going to issue some scammy token to raise something and compete against cash. And oh, by the way, you can only buy one thing with it. It's insane. It won't work. So I don't think that that's a good model. Bitcoin is hard to compete with for cash, by the way. Have you been to NYC BitDevs meeting? Good luck competing against with these guys with cash. You go talk to Trace Mayer, who's speaking here. Talk to some of these guys. Say, oh yeah, I'm gonna, with my $50 million of scam money, 27 of which I spend on marketing budget and flying scammers around the world to give talks, and then 500,000 goes to hiring my buddies and a bunch of advisory fees. With the 5 million that's left in half, that's crashing quick. I'm gonna beat Bitcoin, and nobody's gonna mind that we have a 30% pre-sale set aside. Not gonna work. Not a good model. You can't compete against cash. If you want to compete against cash, go beat cash. Go try and beat Bitcoin, but it won't be by doing an ICO or calling it a utility. Now there might be utilities that work. I don't want to be bad-mouthing it too much. Haven't seen many, but there's certainly different models and like I mentioned with the co-ops and things like that, there are different things that work in a way that work differently than the old world worked. So anything is possible, for sure. But I think the way to know your utility project is good or not is if you started at this thing and said, cannot be solved any other way. There's this new technology that enables us to eliminate the need for a trusted third party. And because of that, we can do something that couldn't be done. That's what security solves. That's a good utility token. But most of them didn't do that. They started over here. How can we avoid the laws? Am I doing on time?
We're running slightly over.
Okay.
One last question. What was that?
Panel. Oh, cool.
He'll be here later for
thank you.
questions and comments. Amazing. Oh, stay. Yes, stay. Amazing.